Hi, today me and my group will be discussing the relationship of the US dollar and the Japanese yen against the Australian dollar. Our three main focus will be the exchange rate expectation, the interest rate, and the rate of inflation. In the next slide, you will see that the exchange rate for the Australian dollar to Japanese yen is 1 to 83.71, and the exchange rate for the Australian dollar to US dollar is 1 to 0.75, and this is according to the Australian Commonwealth Bank. What I will be focusing on is the exchange rate expectation, and this is just one of the many indicators of why the rate of a currency would change. In the next slide, you will see a brief definition of what an exchange rate expectation is. There's another simpler definition, which is that if a currency is expected to appreciate, a lot of speculators would buy the currency, and this would increase demand for the currency and cause it to appreciate. Now, I believe that both the Japanese yen and the US dollar would appreciate against the Australian dollar after 3 to 6 months. Why do I say this? It's because according to the next slide, you'll see a graph which is of the Australian dollar against the Japanese yen. The graph is from Dividend Investors, and it shows on the right side is the Japanese currency to one Australian dollar over the past 3 years. And as you can see, on the left side, it's a bit higher and it starts to get lower over the years. And when it reaches 2016, it's at 78.933. Now, if you look at the second graph, it's a similar pattern, and this is a more up-to-date graph. And this is from Live Financial Charts, and as you can see, the Japanese currency to 1 AUD is decreasing, and hence means that it is appreciating the Australian dollar. Now, if you look at this other graph of Australian dollars to US dollars, you can see that there's the same pattern. It's the same situation with the US dollar. The graph is from XE Currency, and it shows that the US dollar has decreased dramatically towards 1 Australian dollar over the years and stabilizes at 8.0. Here is a more up-to-date graph again from XE Currency that shows us that at this very moment the US dollar is decreasing against the Australian dollar, which sums up that the US dollar will continue to have a purchasing power over the Australian dollar in the next 3 to 6 months. Now, author would be discussing about the next indicator that would change the rate of the currency.
Hi, my name is Arthur. I will introduce relative interest rate. First is the Australian dollar with the American dollar. Australia interest rate is 1.81% according to ANZ. The American interest rate is 0.01% from FRB. And the main influence of interest rate is the exchange rate. So the Australia interest rate is higher than American interest rate. So people want to put the money from America to Australia. So more American dollar will be exchanged. So Australia dollar's demand will increase from D1 to D2, and the exchange rate will increase from B to A. And let me see the second graph. The American dollar will be exchanged, so need more American dollar. So the supply will increase from S1 to S2. The American exchange rate will decrease from A to B. And the second is the Australian dollar with the Japanese yen. The Japanese interest rate is negative 0.1%, according to the Bank of Japan. Also, the more Japanese yen will be exchanged, so Australia dollar's demand will increase from D1 to D2, and the exchange rate will increase from A to B. The Japanese yen will be exchanged, so need more Japanese yen. The Japanese yen supply will increase from S1 to S2, so the exchange rate will decrease from A to B. In the end, by the interest rate parity theory, interest rate is one of the most significant factors which contribute to the change in the exchange rate. Also, no absolute perfect theory also suggests the interest rate will have significant impact on one currency's exchange rate. Thank you.
Hi, my name is Matthew and I will be discussing the effect inflation has on foreign exchange rates. What is inflation? Inflation is the indicator of which the rate of general price of goods and services increase in a specific economy. Now, this is a graph showing the effects of an increase in inflation on the Australian dollar. S1 and D1 will be our original supply and demand curves, and S2 and D2 will be our supply and demand lines after inflation. As you can see that after inflation, the supply line has shifted to the right and the demand line has shifted downwards. Now, this indicates to us that there is now a surplus of Australian dollars, and now there is also a decrease in demand for Australian dollars. Now, this indicates that there will be a decrease in the purchasing power of the Australian dollar, and that indicates that the Australian dollar is also weak against other currencies. Now, this is Australia's inflation rate over the past 3 years, but we'll be mainly focusing on the past year here. And this is the US inflation rate over the past year. As you can see, it's been quite high at the beginning of the year, but it's now dropped down to about 1.9. Now, this is the exchange rate of the Australian dollar and the US dollar. As you can see, the Australian dollar has gained over the past year. Now, this is the analysis. In the short term, we believe that Australia dollar will appreciate on the US dollar due to Australia's inflation rate being lower than the US rate of inflation. The exchange rate over the past year shows that the Australian dollar has increased, and although Australia's inflation rate is forecast to increase over the in the short term, the commodities that Australia exports is also forecast to increase in price, so that will sort of cancel out. And so overall, it is forecast that the Australian dollar will appreciate against the US dollar if we're only looking at inflation. Now, this is the Japanese inflation rate over the past year. As you can see, it's relatively low, at approximately 0.4 over the past 4 months. And this is an analysis of the AUD in Japanese yen. We'll first have a look at the exchange rate. As you can see, Australian dollar has appreciated against the Japanese yen. Now, Australia's inflation rate is obviously higher than the Japanese rate. This would lead us to believe that the Australian dollar would depreciate against the yen. However, However, the Australian dollar has appreciated over the Japanese yen. So in the short term, we believe that the AUD would be expected to depreciate on the Japanese yen, assuming inflation is obviously the strongest impact on the exchange rate.